First of all, thank you, Sophia and Emily, for joining us today. It's my pleasure to be moderating this panel. I know Stealth and Orum are two fintech companies which are very well known in the space, but for the sake of our audience who may not have come across you before, we'd love to just get a quick background and overview what you're focused on today. So whoever wants to kick us off, Emily, do you want to kick us off?
Sure. So I'm Emily. I'm the head of product here at Orum. I'm really excited to be here today. So thank you, Plug and Play, for inviting me. Here at Orum, we're really focused on instant payments. So I think our thesis is that payments should move instantly and payments should be behind the scenes. So how we think about Amazon, a lot of times there's an analogy between our product and Amazon. We don't care if we receive our package on Amazon via FedEx, UPS, or Amazon. We just care that it got there on time. So we have a similar thesis here at Orum. We don't care if the payment is going via wire or FedNow or RTP or push to card, right? We just want to make sure we get it to the destination or the beneficiary as quickly as possible. So that's what we're up to here at Orum, and I'll pass it off to Sophia.
Hey, thanks for having me. So I'm Sophia Goldberg. I'm a co-founder and CEO of a fintech startup, and we're still in stealth, so we'll be more public about what we're building next year. But I'm also the author of best-selling Field Guide to Global Payments, and have spent the last 6 years in payments, worked across commercial and product roles at Adyen, and really passionate about the payment space, how we can make payments more seamless and fitting for merchants and consumers as well.
All right, thank you for the introductions. I'll just jump in with the first question. The idea is that transactions become embedded, invisible, and enabling in an environment that is collaborative and supposed to support the consumer experience in an omni-channel world. What is your opinion on that? Sophia, do you want to start?
Sure. I think I agree overall, and we're seeing a move towards this with things like verticalized platforms, and I really call it payments plus. So what can you give to a merchant beyond just payments, which especially when we're talking card payments in the US, it's pretty commoditized. And merchants need more tailored solutions, whether that's additional products or a payment solution that works for them, to make that commerce feel more native and embedded, reducing friction, everything like that. And yeah, so I think we're in the early stages still, and it's pretty exciting.
Emily, would you like to add to it?
Yeah, I agree. I think I spent a lot of years over at Square and Cash App, and omnichannel was like always a priority, right? And that was about 8 years ago. So now, right, omnichannel is still a priority. I think there's still a lot to be figured out, but I think to Sophia's point, it's a big opportunity. I think here at Orum, we think about it a little bit differently in terms of how is Orum in the background, right? We are moving money instantly, but in the background. And I think that creates really beautiful experiences for the customer, because they're like, my payment showed up instantly. I don't know how, but like, this is really magical and cool, right? So I think I've seen it two different ways, both from a merchant perspective, a payment perspective at Square and Cash App, and now thinking about it a little bit differently, but for the ultimate goal of creating magical customer experiences, both places.
Awesome. And maybe as a follow-up question, we see these big tech giants like Apple, Google, Facebook, and others introducing their own payment products like Apple Wallet, Apple Buy Now, Pay Later. How do you think about that?
Yeah, so I think it's really interesting, and it makes a lot of sense for them, and it can make a lot of sense for the consumers, right? I think they all have large customer bases, so from an adoption perspective, they have a huge leg up on any consumer-facing startup entrant. But the inverse of that is they have to have good trust. They have to be agile enough to build these products well and quickly. And that then leads to a really huge opportunity in the fintech and payments ecosystem for infrastructure providers like Orum and many others to provide those services and let those merchants, launch those products, but not build the solutions down to the metal themselves.
I agree. We talk a lot about trust. It's like, there's a reason the banks are audited. There's a reason they're regulated, right? And we talk a lot about how, right, we can live up to those standards and make sure our customers are trusting us like they would a bank. And I think, the trust of fintechs, I think, is growing, but I still think there's work to be done there. On the flip side, I love the innovation that Apple's done. I mean, like, you know what I mean? So I think they've done a lot, specifically Apple and Google, a lot for the consumer, but I completely agree. It all boils down to trust and, making sure people can trust us like they trust the big banks of the world.
Yeah, definitely. And this brings me actually to my next question, which targets a lot of people in our audience today. Is the time running out for banks and traditional payment services as all these non-banks venture into territories to seize a competitive advantage? And does it threaten the bank's market share?
You want to take this one,
Sophia, you want to
Sure.
go?
Yeah, I can kick this one off. So I think definitely not, in my opinion. I think we all in the startup ecosystem feel like we're running out of time and we're not going quick enough. But the reality is, like, we're still in really early innings of payments innovation in the US and globally. And so I think, similar to my point above or before with like the large tech companies, the network effects that these incumbent large banks and financial institutions have may mean they're slower to market, but when they move, the move is large. So if they choose to adopt something or go live with something, they may also be waiting to see what the winners are, letting all of us in startup land try lots of different solutions and see what works, and then either partner or acquire or copy whatever solution they think is most valuable. But I definitely don't think if something's threatening their market share, they may be slow, but they're very, very smart.
Yeah, I think here at Orum, we still think banks are the heartbeat sort of financial services and of payments. And I don't see that going away. I also have a strong opinion that, like, we've come a long way in terms of financial services in the past, say, 10 years, but there are still a lot of opportunities for problems to be solved. I was just doing a whiteboarding session with our CEO, and we're like, oh my gosh, the opportunity is still so big, right? You still have $72 trillion a year money going over ACH, which is taking 3 to 5 days to settle. Like, there's just still a lot to do there. So I don't think we've run out of time. I think the opportunity is huge. And also, I think the banks will continue to be kind of the heartbeat of financial services for the near term, medium term future.
Yeah. And another thing we have heard plenty about this year is real-time payments. I don't know who wants to take it first, or what you think are the downsides or opportunities of this technology. I think that would be very interesting for us to hear.
I'll let Emily kick us off there.
Yeah, I can take this one to begin. So for those in the audience who don't know, real-time payments is an instant credit payment rail. And I'm very intentionally using credit because I think it's a big opportunity on the debit side. So the coverage we're seeing is about 62% of coverage, meaning 62% of banks and bank accounts in the US can receive an RTP payment. Most of that coverage is covered by the top 20 banks in the US, given RTP is managed by the clearinghouse. When I think about the opportunities, and when we talk to the clearinghouse, the big opportunities here are going to be coverage, right? How do we expand coverage beyond that 62%? So that we can enable financial inclusion, right? So that everyone can receive money instantly, not just people essentially that bank with those top 20 banks. And secondarily is, how can we leverage the instant push mechanism as actually an instant pull mechanism, right? So if I can send an RTP payment to my JP Morgan account, that's great. But how can I fund my, let's say, Cash App account via RTP as well? And that's when the magic comes from a consumer perspective. It also helps reduce fraud, et cetera. So those are kind of the biggest two opportunities in my mind. I think we'll get to coverage when it comes to FedNow, but I mean, RTP has been huge. The limits increased to $1 million. So at Orum, we see a lot of different use cases from a maybe you're closing on a piece of real estate, and instead of wiring the money to the bank, we're using RTP. We see it a lot in instant payouts, like your traditional B2C payouts. We see it in bill pay, right? So we're seeing an increased amount of use cases that are using it, which is really, really exciting. But the biggest two opportunities, again, are going to be your coverage and how we leverage it as a debit with things like request for pay and things coming down the pike. Sophia, I would love to hear your thoughts as well.
Yeah, I think of RTP because, I don't think we're going to see a world of everything is RTP anytime soon. I think to Emily's point, we still have a ways before we get to ubiquity, just in, consumer ability to accept or use it. But I think of it as just like another arrow in the quiver of merchants and commerce, of another really strong, newer option that beats some of the existing incumbent rails, whether that's B2B who uses cards for large transaction sizes, or like you said, like wiring $1 million for a home or something, where those days actually matter and that confidence that it gets there really matters. And so I think it's kind of part of this, like we're moving past this one size fits all era. And it really comes down to, there's a lot of use cases for something like RTP, down to risk profiles, different transaction sizes, whether it's B2B or B2C, or a marketplace payment. And so it's just another really strong option for merchants to use.
I think that was really helpful for all of our audience as well. And also the last topic I'd like to tackle on, and we heard also a lot of it this year, is FedNow. Where do you see the future on FedNow, or what's your take on it?
So this is probably our top asked question, to be honest. When people come to Orum, I am excited because there's been a lot of press on it. I think it's kind of a trending thing in the payments world. So we get a lot of questions on it. Our point of view is that FedNow will be another tool in our toolkit or weapon in our arsenal to send money instantly. Initially, there will be some limitations. The first limitation is going to be the limit of $25,000, right? So when you're looking at RTP of $1 million, FedNow 25,000, right? That's a big gap. And when I see really interesting use cases coming for RTP, generally, some of them are going to be on the smaller end, like instant payouts for brokerage platforms, et cetera. But a lot of them are going to be, how are we replacing wires with the larger transaction size? That being said, I am hopeful that FedNow will help with the coverage issue long-term that we've seen with RTP, because FedNow is obviously managed by the Fed, hence FedNow. And so you don't have the same concerns with the clearinghouse and the top 20 banks, et cetera, that you do with RTP. We see it as really, I think they'll support FedNow, similar to RTP, will really support similar use cases on the B2C, on the B2B side, me-to-me, et cetera. We're really excited for it. It's coming, what we've been told is in 2023. We actually talked to the Fed a lot. Our CEO, Stephanie Kirkpatrick, has a really good relationship with them to ensure, right, that FedNow is going to solve some of our problems, ours being the American financial infrastructure. I think that the coverage will likely be a slower rollout. So, I'm not saying we'll see 100% coverage when they roll out in 2023. It's going to be a long tail, and I think a slower, longer rollout. But I think it is exciting because we now have two instant payment rails with RTP and FedNow. Then the opportunity comes for startups, right? How are we creating magical consumer experiences? How are we creating magical business experiences, et cetera, right, with these two instant payment methods in our arsenal? So I think we'll see some really cool innovation from startups, et cetera, on how they leverage these rails.
Sophia,
I have nothing to add there. Yeah, FedNow is an area that I also would be one of the ones going definitely to be like, hey, teach me more. So I think her response is great and nothing important to add there.
We actually just published a blog on it. I think if you Google what is FedNow, our blog should come to the top. So if anyone's interested, it kind of gets into more of the details of settlement, how it works, et cetera. So if you're interested, Google it. And I think the Orum blog should show up.
All right, thanks. Just maybe a follow-up question, Emily. How do you feel like with the FedNow service compared to other faster payment services, which are already in the market? How do you think this differentiates?
So I think in terms of how it's differentiated from RTP is on this actually like how the money is being settled. Again, because RTP is essentially works via settlement within the clearinghouse. For the Fed, with FedNow, each participating bank actually leverages their own existing Fed account. And so there's going to be some tweaks in how fast the settlement actually is, how easy it is for banks to actually get up and running. So the hypothesis there is that FedNow could be easier to adopt than RTP, but I think a lot of that's still being worked out and is yet to be proven, right? That's the hypothesis.
Right, thanks. I got a question in our chat, and I'm gonna read it out loud, and whoever wants to take it. But it says, what do you think are some of the challenges that might arise in the payment space in the future?
I can start with that. I mean, I think that's a very broad question. There's many challenges and lots of room for solutions. I think in the short term, going into like a rougher macroeconomic environment, I think some challenges are going to be around credit and how credit shakes out. We saw a huge boom in BNPL. I think some of that music is stopping a little bit. So I think it's going to be interesting to see how that goes. I think typically we're also seeing a lot of fraud this time of year across different payment methods. And so I think the next few years are going to be a lot of building trust, good underwriting and fraud monitoring and things like that.
Right, thank you, Sophia. I also have a question for you. How do you feel, how will the macroeconomic environment impact the payment industry?
I'll let Emily take that one because mine kind of answered that, but
I agree with Sophia. I think, right, because we have an unsettled macroeconomic situation happening, there likely could be more fraud, especially during the holidays, right? And so I totally agree with the fraud point. I think from a positive perspective, when I was at Square, and Sophia, I'm sure you saw this at Adyen, like people get laid off and there's a struggling macroeconomic economy situation. A lot of people start their own businesses. And so what we saw is actually total payments volume never really declined as you would expect, because you actually see more businesses. You actually see, oh, I just got laid off. I'm going to go start the coffee shop that I've been dreaming about doing for the last 10 years, right? And so then it's a cycle, right? Then you have the green shoots of the new businesses. Guess what? They need payments. And then it all kind of comes around. So I agree. There's, we might be in for some tough times, but I think looking at, the opportunity on the other side on what's going to happen, I think that's what always excites me. And we've seen it from the data at Square. So I'm excited to see what businesses are formed, who's opening their dream coffee shop, et cetera. I think it just kind of makes this cycle of payments really exciting.
All right, thanks, Emily. I have another question here in the chat. Internationally, are there any innovations happening in this space that we could see making its way over to the US?
Sophia, I'll let you kick off with that one.
Yeah, I mean, I think a lot of what we're seeing with RTP and FedNow dovetails like the rise in instant payments we've seen globally and have been pretty lagging in the US. So whether that's Pix in Brazil or UPI in India, So I think it's more of a question of how much more does the US government play a role in the adoption of real-time payment rails. And so really excited to see what happens there, because then you get into questions of identity and risk and fraud monitoring and all of these other aspects that if we solve them, we could have like a really powerful system here. So I think that's one part of it. And then a continued rise of wallets like Google Pay and Apple Pay have become much more popular during the pandemic, but it's still actually really low penetration. And so we're still in early stages of things like contactless, like embedded wallets, things like that.
I think we have a big opportunity with open banking. Like whenever I go to the UK, I'm like, oh my gosh, this is so cool. Or you know what I mean? So I think bringing instant payments as more mainstream to the US and also open banking, I think will be really interesting.
All right. And another question, is the payment space interested in exploring blockchain or solving various challenges?
Yeah, I mean, I like to say crypto is part of fintech and it's not a separate thing. And using blockchain, I think obviously we're in a tricky space right now with a bear market and a lot of fraud in the space. So the trust aspect, which is really important to any financial transaction, is in a shaky place. I think my take on crypto and blockchain applications is, does it solve the problem better? And so getting away from it just being like novel or exciting, but does it solve it better? Is it faster or more secure or cheaper? Which it's not always all three of those. But I think, as the space continues to evolve and innovate and mature, we will see really exciting continued use cases there.
I agree. I always laugh when people are like, I'm starting a blockchain company. I'm like, that's great. But like, what problem are you solving? Like, what problems are there that can be solved with blockchain? A lot of problems, right? But I think, especially the last few years, it used to be like really cool to say, I have a blockchain company. And we saw a lot of unsuccessful blockchain companies, right? Because they're a blockchain company. They're not necessarily solving a real pain point out there. So I absolutely agree that like, crypto, blockchain are a core pillar of payments. I always encourage people to think of what problem they're solving, not necessarily just creating a crypto company to create a crypto company.
Thank you. That's helpful answers. What are your thoughts on open banking and payments in North America? Have you seen any interesting startups tackle this well or trying to tackle it?
I'm not, super tapped into what that is here, but my understanding is it won't really be a startup that leads the charge. It has to be, government and banking side. So no info there, but would love to learn more if someone else knows more.
If there are any startups tackling it, let me know. We would love to talk, but yeah, it would come from the top.
All right, I think this is the last question we're gonna take. And then when there are more questions, I'm happy to forward them to our speakers. But the last one is, do you see any innovation use cases to serve low credit score people or people with no credit history?
Yeah, there's actually a lot of exciting innovation in that space. There's quite a few like consumer credit or credit building startups where you can start to, there's a few where your subscriptions help you build credit and they give you a debit card. There's really interesting things in that space. There's also, companies like Sequin, for example, helping women build credit because a lot of women are on, their partner or spouse's credit line, and so they're not building their own credit. So there is a lot of innovation in that space on the consumer side. So yeah, still early stages, but a lot is going on there.
Right. Thanks for all the questions. Now I'll actually hand it over to my colleague. So thank you, Sophia and Emily. And I'll hand it over to my colleague, Sanne Kamper, who will introduce our startups. Sanne, the stage is yours.
Thank you, Julia. For those of you who don't know me, my name is Sanne Kamper. I work on the Fintech and Enterprise Tech Ventures team, and today we will have the opportunity to learn more about two exciting startups in the payment space, Frank and Trevi Pay. As mentioned previously, each startup will have approximately 8 minutes to present their startup, followed by 2 minutes of live Q&A. So whenever you have questions to the startups, just write them down in the chat. In addition, for each Q&A session, you will see a pop-up window appear on your screen, so you can let us know if you would like to connect with the startup after the event. And with that being said, let's move on to the startup presentations. The first startup to present today is Frank. Frank is the one-stop shop for B2B vendors to close their customers from deal to cash in bank. I'll let Charles, the CEO and co-founder of Frank, tell you more.
So yes, thank you again, Plugin, for letting me introduce you to Frank. Good morning, good afternoon, everyone. And yeah, so at Frank, we're building a zero friction payment experience for B2B SaaS. So let's get into it. I'll start with us as a team. So we are two co-founders. My name is Charles. My co-founder is Sami. I worked most of my career in finance and investments. I worked in the US mainly, but also in Europe, investing in a wide range of assets and structures, from private equity to private debt, loan, LBO, you name it. And finally, and mostly in venture capital. And while working in VC, I led 25 transactions, most of them in B2B SaaS, and I had a chance to see the board of 6 of our B2B SaaS portfolio companies at that time. Engineer, full stack software engineer. This is his third SaaS startup experience, being tech and CTO in 2 other startups. He's pretty much built the team from the very scratch, i.e. him alone all the way to the first 20 employees in US-based VC-backed SaaS companies. And so the problem that we're solving at Frank is the inability for a B2B SaaS to actually sell to B customers. So pretty much 100% of the B2B SaaS have a thorough process, if not automated process, when it comes to small customers, selling to small customers. So what happens is that usually they will talk to only 1 people on the small customer side, if not no one, and they will actually collect the cash from credit cards or direct debit, so what we call online payment methods. Well, it's a whole other story when it comes to scaling and selling to B customers. So the problem is that it is at least threefold. It's about payment method, it's about products, and it's also about process. And when it comes to the payment methods, yes, so the big customers just don't pay per credit card. They don't use instant payment methods. They use antiquated offline payment methods like ACH credits or ACH push. They use checks, wire transfer, sometimes cash. You would be surprised how many businesses wants to pay subscription software with checks or cash. The product problem is that big customers usually need custom products. So what happens is that a sale on the phone, actually, when he has a big fish on the phone, just wants to sell whatever he can. So it is usually very different to what the B2B SaaS claims to sell on their website in terms of features, plans, discounts, add-ons, everything. So he just makes up all the product on the phone so he can actually sell as much as he can to the B customer. And usually this causes a lot of problems in terms of billing and in terms of just product buildup, because it basically just sells a product that does not exist. And of course, in terms of process, where big customers don't have only 1 people usually that you're talking to when you sell a software. You talk to a bunch of people, like dozens of people on the AP team. You feel very burdensome paperwork in the format of PDF, Word, Excel. You have like usually channeling back and forth, and you also usually go on onboard on what we call procurement software, like or procure to pay software like Coupa, Ariba, Oracle Clouds. These kind of software that are very repetitive and very burdensome for the B2B SaaS, so for the vendor. Our solution at Frank is a layer that we are building and developing on top of the existing payment infrastructure of this B2B SaaS. This layer takes the form of a sales-friendly platform, and this allows the B2B SaaS to actually scale his sales, like the sales forward and sales efforts to big customers, including a lot of enterprises. I insist on the sales-friendly effect and part of it because SaaS is all about tech, and payment matter, however, is not a tech matter. It's about sales, operations, or accounting and AR when there is any of this team. What happens today usually is that salespeople or the people in charge of collecting the payments do a lot of manual inputs and tasks inside their payment platforms. So they will manually create the profile of the B customer. They will manually create, tweak, and build the product that the sales actually made up on the phone, like as I was mentioning. It will manually monitor the payments, the offline payments, whether it's by check, ACH push, or wire transfer. You will also manually gives access to the products platforms via the backend. So this is just a lot of manual input. This is usually so much of a pain that he's sometimes, I mean, most of the time, asked to another team or other people, which creates even more friction internally inside the B2B SaaS, so the vendor. Frank offers a full set of features that actually solve these problems. We offer an online checkout experience, including offline payment methods. We are building a drag and drop model for an intuitive product buildup and invoicing system for the sales to be able to actually sell whatever they want and the way they want. And so we are developing a set of integrations to actually connect to the stack software of the B2B SaaS, but also the backend of the product. So actually, when a big customers pays via checks or credit, via check or ACH credit, it actually connects directly and gives access directly to the product. We worked a lot on our go-to-market to identify what would be the best fit and what would be the best go-to-market strategy. And we are focusing on a very specific type of B2B SaaS, which are the B2B SaaS offering free trials and self-serve products. So what we like to call product-led growth strategy, which is a very bad techy word to basically say a software product that sells by itself. So, all of this B2B SaaS that will have on top, usually on the top right corner of their website, this free trial or sign up for free button. The reason why we're focusing on this, there's at least 3 reasons why we're focusing on this specific B2B SaaS companies. The first is that those guys usually use Stripe building, and Stripe is a wonderful tool. I don't pretend to say any bad thing about Stripe, but we like to say that these companies usually have created what we like to call a technical debt by using Stripe building. Stripe is wonderful to use and to collect cash via credit card and direct debits, like instant credit, instant payments methods. But it actually creates a lot of frictions, the same as the one I was mentioning when it comes to offline payment methods and processes that are actually involved into selling to big customers. The second reason why we have identified this type of B2B SaaS as our go-to-market is just a very fast-growing market. So we have identified more than 7,000 product-led growth strategy SaaS only in the US, and this is a market that is only growing. And the third reason is that we with Sami, my co-founder, have a strong network of B2B SaaS that offer free trials and self-serve products, and we are already selling 2 of them. We have like dozens in our pipeline, and we have validated these problems and the fact that this SaaS wants to pay for it with 24 of them. When it comes to our products, we are developing our first 2 products with in-car development with our customers. The first one is an add-on on Stripe to actually link and automatically give access to big customers paying per check or ACH credits to the product, to the SaaS product, the SaaS platform, via integrations with product backend frameworks like Django, Ruby, or Node. Sorry, this is very techy. And the other product that we're developing is a usage-based billing solutions, which is completely independent from Stripe and is the backbone of our drag and drop billing solution custom for big customers. So that's pretty much the story of Frank. We are on a mission. Our very first mission is really like to unlock B2B transactions for every single SaaS company in the world. We believe that B2B payments should be as easy as B2C payments. And the reason also what I like to talk about this specific B2B SaaS, the product-led growth company, is that those guys use consumer strategies. They want to sell free trials. They want to sell software with free trials the same way you would actually sign up for a free trial with Netflix or Spotify. So it actually, like, we distribute all the cards of sales efforts from B2B SaaS. This is a very powerful tool in terms of sales. but it actually creates and requires a whole new way to think about payments for B2B.
All right. And now it's time to move on to the next startup, trevi. trevi is a global B2B payments and invoicing network that is chosen as the preferred B2B payment method by thousands of corporate sellers and their buyers globally. Let's welcome Max from trevi on the stage.
trevi is a global B2B payments network. Although we're launching a new payments network, which is why we're here, we're not a startup. We actually operate in 32 countries today, 19 currencies, supporting nearly 200,000 sellers and buyers, processing over 6 billion in B2B payments transactions annually. Historically, our network has supported large white labeled trade finance programs for brands such as Best Buy, Staples, Lenovo, Choice Hotels, just to name a few. We recently announced the launch of an exciting new B2B payments network, one that is specifically designed for financial institutions and the small business customers they serve. Our small business supplier payments network is the next step in the evolution of small business financial services, capable of virtually eliminating the B2B trade credit burden for small business suppliers, much like credit cards did for retailers. Today, the reality is our small business suppliers act as a bank for their business customers, businesses of all sizes, much often larger than the small business supplier. In the US, these suppliers extend over $5 trillion in trade credit annually, and it may come to you as a surprise that less than 15% of those extensions are actually being financed. These small business suppliers also wait an average of 51 days to get paid. So while we talk about real-time payments and the value of not waiting the 2 to 3 days ACH takes, very important to focus on. But the bigger problem for small business suppliers is actually the fact that they have to offer trade credit, which means they offer invoice terms before that payment's ever sent. And so that's where a big part of our focus is. Trade credit, honestly, is the original buy now, pay later program, but it's also an inefficient use of the supplier's limited working capital, and it creates an impediment to their growth and resiliency. When you look at this, the small business suppliers really need the same benefits that retailers enjoy every day when they take a credit card. And that's real time. And again, I define real time as 3 days is real time for these small business suppliers. So real time, risk-free, debt-free payments. That's what retailers enjoy that the small business suppliers would die for. But the reality is business buyers want and need the value of trade credit. It's an intrinsic part of their working capital stack. Even in the Fortune 50 companies, it's a part of their working capital stack that's not going to go away. So trevi-Pay's small business supplier network was designed to meet both the needs of the suppliers, the small business suppliers, and the business customers they serve. Max is going to help me highlight just a few parts of the network. So Max, are you ready?
Let's go.
All right. So today, Max is going to act as a sales manager for Supply Depot, who is our supplier and customer of our make-believe First Street Bank. In the network supplier app, Supply Depot has complete transparency to all the prospective and existing buyers and invoice-related payment transactions. As an authorized user for Supply Depot, Max can qualify buyers to purchase on invoice terms anywhere, anytime.
So I'll go ahead and qualify Times Grill because I have my first sales call with them tomorrow. And to be competitive, I'd like to be able to offer Times Grill 60-day invoice terms with a trade credit limit of $50,000. Real-time buyer qualification decisions are much easier than our old back office processes. And by qualifying before the sale, my company and sales team can know and sell with confidence before knowing that we'll get paid on time.
So when you think about it, credit cards focus on providing buyers spending power. Our network focuses on providing small business suppliers selling power. So here, as an employee of Supply Depot, Max knows that he can go make this sale for $50,000 or multiple sales that add up to $50,000 with invoice terms that are competitive and with a fee that is known and accepted by the company. The company knows that they're going to get paid real time. They know that if the buyer pays late, they're not going to pay anymore. And if the buyer doesn't pay, they keep the payment as long as they've delivered the goods and services, just like traditional card merchant services would act.
Well, my sales call with Times Grill went great. I got my first order for $8,000 and we shipped the goods out today as well.
That's great, Max. So, once the goods and services have been delivered, Supply Depot's finance associates can determine whether or not to take an early payment. So let's check in with Supply Depot's finance associate, who Max is also playing that role.
So I can see here that there are 3 invoices for just over $16,000 that I can get paid on now. My payroll goes out on Friday, and I'd really prefer to have an extra cash buffer rather than waiting 60 days or more to get paid.
So assuming these invoices are verified, which is a risk process that the bank configures and TreviPay executes, Supply Depot's payment will be sent via ACH that evening. For small business suppliers, that trumps the net 30, net 60, net 90, or net never waiting game. Let's go ahead and switch gears and look at the network from a different perspective. Let's look at the bank's user experience. The network serves multiple user personas within a financial institution. It could be product, sales, risk, finance, for example. These user groups are able to see real-time network data as appropriate for the function they serve. Let's go ahead and talk to First Street Bank's risk employee, Max.
Yep. We still have good availability under our program limit. I can see that here. Wow, it's only 9-10 o'clock in the morning, and we have quite a few invoices are ready for approval. I like that our risk team could put an invoice on hold or even decline an invoice payment. I know these invoices have all passed our risk-related configurations, but it's great to have that safeguard. We should have some real happy customers today. Our small business suppliers sleep better at night getting these real-time payments.
That's right, Max, they sure do. Look, the small business supplier network is expansive. Max will show you a few different screens while I wrap up here. So let me just give you a few takeaways. The network connects the small business supplier, their buyers, your institution, and TreviPay as the network provider and the payments orchestrator. Member banks, your institutions would act as member banks. Think of that role as a parallel to Visa and MasterCard issuing banks. You would sell the B2B merchant service to the small business customer base. 50 to 60% of your small businesses will act in a capacity as a supplier selling to other business customers. Your institution as a member bank would fund and take the credit risk on these invoices presented by the suppliers who are your customers. But your institution is in control, customizing its program across a set of product, risk, pricing, and distribution parameters. And we've built it in such a way that launching a pilot program requires zero capital investment and no new technology integration. TreviPay's role would be to manage the network and drive continual innovation, provide day-to-day risk management support, including the invoice verification process, manage the credit enhancement programs that we were able to offer, and handle payment posting, buyer disputes, credit returns, and other key operational services. The Small Business Supplier Payments Network will enable financial institutions to access this huge SMB trade credit market in a way that's safe, efficient, and profitable for your institution, thereby unlocking, the largest single growth opportunity in small business banking. Working together, we finally have a real opportunity to change the long-standing trade credit paradigm and strengthen our small business economy. So we hope you join us on this journey.
Thank you, Sanne, and thanks for everyone who joined us today. I hope you enjoyed the session. We launched a quick feedback survey, and we would love for you to fill it out. And for everyone I won't see anymore before Christmas, I wish you happy holidays.